Hello everyone. So we are now starting with the new topic, that is the rise of digital money. Clear? So first of all, let us understand a small point of discussion on what is that money. Money is nothing but a medium of exchange. Okay, medium of exchange means if suppose Mr. A and Mr. B. If Mr. A got rice and Mr. B got wheat. Clear? So Mr. A suppose also need wheat and Mr. B suppose also need rice. So what they will do? What they can do? They can simply Mr. A can simply share say 10 kg of rice with Mr. B, and in return of that rice Mr. B can give 10 kg of wheat. Clear? So they both will get satisfied. Clear? They both will get satisfied. Now this proportion is also very important. Clear? This proportion is very important in the sense that if suppose Mr. is giving 10 kg of rice and that is worth of equals to 20 kg of wheat, 20 kg of wheat. Clear? So what they did, they tried to give some amount to rice. Okay, some amount to rice and some amount to wheat. Clear? So if Mr. A wants to have some wheat, he got rice but he want to have some wheat and he got extra rice. Suppose he got the production of 100 kg of rice and he need only 60, so he got 40 extra. So he can sell the 40 kg of rice in the market. Suppose the price is 10 per kg, so how much he got? 400 rupees. Clear? Similarly Mr. B, okay, he got 200 kg of wheat and out of which he needs only say 120 kg, so he can sell 80 kg in the market. Clear? And suppose the price of wheat is 20, so how much he got? He got 1600 rupees. Clear? Now Mr. B needs say 20 kg of 20 kg of rice and Mr. A needs say 15 kg of wheat. Clear? So what Mr. B will do? Mr. B will actually pay how much? Mr. B will pay to Mr. A how much? 20 multiply with the price of the rice, that is 10, 200. And similarly Mr. A will pay how much? 15 multiply with 20, that is 300. And now they can both exchange the wheat and rice. Clear? So they actually got the standardization with respect to the rates, with respect to the amounts. Clear? Now if you'll see that, you will visit some apps. Okay, apps like Paytm, okay, Alipay. Like this there are many apps and they have their own wallets. They have their own wallets. Clear? And in the wallets they give us the coin. They give us coin. Clear? Suppose I'm just giving an example. Suppose from 5 coin you can purchase 1 kg of rice. Clear? So the standardization is very different. Earlier you need 10 rupees to buy 1 kg of rice, but Paytm have their own coin whose worth is different. The rupee which is issued by the RBI, they have the different worth, and the money issued by the Paytm, they have the different worth. So everyone is issuing their own currencies in the market. You will see one more current type of currency, that is cryptocurrency. Okay, and that cryptocurrency is based on which concept? Blockchain concept, and these are issued by non-banking institutions. Clear? So money is just a medium of exchange. There are many institutions nowadays which are coming up and they are issuing the currency. The first and the foremost currency which is issued by the central bank of every nation. Central bank of every nation. Clear? In India it is rupees and in US it is dollars. We have pound, we have euros. Clear? These all currencies are issued by the central bank of the respective countries. Then we have cryptocurrency. Cryptocurrency issued with the help of blockchain technology, and these are issued by non banks. Okay, non-banks are issuing this cryptocurrency. Clear? Now there are banks also who are issuing their own money. There are banks who are issuing their own money, known as B money. B money, the money which is issued by the bank. Clear? Then there are some of the private sectors issuing the money. Who are issuing the money? Private sector issuing the money, and that money known as e money. E money. Clear? And there are some investment banking firms, investment banking firms, and they are issuing I money. Clear? The money, the Paytm money which I was talking about, issued by a private sector institution, is known as a e money. Okay, that's something which you will find in terms of wallets. Clear? So these are the 5 different types of money or currency, you can say. The one which is issued by central bank, then cryptocurrency which is based on the concepts of blockchain, then the money issued by the banks, B money, money issued by the private sector known as e money, money issued by the investment banking firms known as I money. Clear? Now when it comes to the central bank, the money issued by the central bank we have in the form of paper notes or in the form of coins, which we always carry with ourselves, or we can say which we carry in our wallet. Now the money which is issued by the banks, okay, that comes in the form of debit card, or it comes in the form of check, or it comes in the form of wire transfer. Clear? The money which you are using from the bank side, even the credit card money. Clear? The money which you are using with the help of the instrument provided by the bank. Clear? Now the one of the major advantage of that money which is issued by the bank, they are factually backed by the government. They are factually backed by government, and this is the reason they are stable. You won't find out that you have issued the check of $1,000 and later on it will become $1,200. Okay, you won't find such things. Why? Because they are stable. But suppose you have today crypto of $1,000, possibility that tomorrow it can become $2,000 or it can become $500. Clear? So the money is not stable, but the money which is issued by the banks, they are stable. Okay, because they are backed by the government. Clear? Now what is I money? I money is basically just like an equity. Okay, I money is just like an equity. I'm not saying it's an equity, it's a like an equity. What is equity? Equity is a shareholding. You invest your money in a company and they will give you the shares. Similarly, I money is a claim on the asset of the organization. Write down: claim on the asset of the organization. Claim on the asset of the organization. Suppose I give you an example that there is an ETF fund which invest in gold. Okay, so that ETF fund purchase the gold bars. Clear? You give them money, they will give you what? Units. Okay, you give them money, say they give you 100 units. That 100 units is equivalent to say $5,000. Clear? That means what? It means that the cost of one unit is $50. Clear? So that is I money. Clear? Now I money is more stable than e money. Why? Because I money is backed by the asset, but e money is not backed by any assets. E money is not backed by any assets. Clear? So what are the problems with e-money? Not backed by the government, not backed by the assets. That's why they are not stable. Same with the cryptocurrency, not backed by the government. Also, they are not backed by any assets. So now, one thing I can assure that the central bank money is fixed in nature. Clear? Because backed by the government. Bank money is also fixed in nature because backed by the government, and I money is also fixed. Why? Because backed by an asset. But e-money is not going to be stable. It is going to be variable. It keeps on changing from time to time. Clear? So I-money is variable. Clear? And it is decentralized. Decentralized. Clear? Means different region have different worth of money. But if you'll take $100, whether in India, whether in Europe, whether in Japan, whether in China, it gives you the same worth. Clear? So the money which is issued by the bank, issued by the investment banking firms or the central bank, they both comes under centralized as well as decentralized. Clear? So if I'll prepare a small chart, that first of all, fixed, variable. So under fixed you have B money, that is the money from the bank, and I money, the money from the investment banking firms. Clear? Now this comes from the government, this comes from the private institute. Clear? This comes from the government and this comes from the private institute, and they both have centralized as well as decentralized. This also centralized as well as decentralized. Clear? Now when I'm saying centralized as well as decentralized, centralized and decentralized, what does that mean? Why I am saying this? I am saying this, the technology used for settling the transaction. Write down: technology used to settle a transaction. So these two type of money have both centralized as well as decentralized. Now if I'll come to variable one, we have only e money, which is private, and it is only decentralized. Clear? It is only decentralized. Clear? So we have the basic understanding now that what is money, different types of money: government money, private money, centralized, decentralized, fixed value, variable value. Clear? Now let us move ahead to the second part of our discussion, which is based on the characteristics of e-money. So over here the focus will be totally on the e-money, that is the variable part of the money, which is private, which is decentralized. Clear? Now first of all, understand that what are the risks associated with the e-money. There are basically 5 different types of risk which are associated with e-money, which starts from operational risk, liquidity risk, default risk, market risk, and foreign exchange risk. Okay, now we are well versed with all different type of risk, but just for the sake of introduction, I'll say operational risk, because they are afraid of cyber risk, because this is completely based on technology, and technology can be easily hacked. Clear? Liquidity risk, because if there is assets at the backing, okay, the issuer of the currency will be having some assets, and suppose the assets are very fluctuating in nature, the price of the asset will fluctuate, so this leads to the price of the e-money is also fluctuating. Default risk, the credit worthiness of the issuer, the financial stability of the issuer may fluctuate. Clear? Similarly, the liquidity with respect to those e money, means suppose I want to sell the e money, but the someone other one, he don't want to purchase it. Clear? So there will be a liquidity crunch. Clear? Similarly, we have the issue of foreign exchange risk, means if in India you are having 100 coins. Clear? And you want to spend it in USA. Clear? But the worth of this coins will change in USA because of the currency exchange rate. So the exchange will also impact, and that will become a point of concern for me, because I am a e-currency holder. Clear? So these are the issues with respect to the e-money. 5 risk: operational risk, liquidity risk, default risk, market risk, and foreign exchange risk. Clear? Now let us come to our point of discussion, which is the characteristics. First of all, it is convenient. Okay, e-money is totally convenient to use because it is based on technology, and it comes with the point of concern that they will make the life of the users easier as compared to the earlier point of time where we are handling that physical cash in our pocket. Clear? So it is going to be very convenient. Okay, user experience is excellent. The money which you have in your wallet, that is based on your lifestyle choice and other social media integration. Clear? Now when it comes to the ubiquity, now that means that simultaneously that money is available everywhere. Okay, you can carry that cash, that cash, or the money in your wallet of whether it is Paytm, WeChat, or Alipay. You can carry it anywhere. Okay, in different part of the location, different part of the world, and you can use it there. Clear? Second, it is complementary. We can say that it is backed up by the blockchain technology. It eliminates the transfer cost. Currently, if you want to send money from India to USA, it is a very costly affair. But with the help of this e-money, if you are transferring that money from one country to another country, it can be done without any fees. So can you say you are saving lots of chunk of your money? If you'll make a payment via debit card, there are lots of charges. Clear? Now apart from that, trust is the most important factor when you are using the e-money, because you know that the money issued by the central bank, you have trust on it. But the private institution, they need to create the trust in the market, and once trust will get established, you are completely comfortable with that money to use. And the last one is the network effect. The more merchants, the more peers will start using it, the customer will also start taking the help of that e-money. Means suppose you have a Paytm wallet, and the shop you are visiting now, they also have the Paytm wallet. So means you can transfer the money from your Paytm wallet to their Paytm wallet. Clear? So if that kind of network is built up in the country, that means you can transfer money from one account to different account simultaneously at a single point of time. Clear? So in this section we have discussed 2 points. One is the risk associated with the e-money, and the second is the characteristics of the e-money. Clear? So I don't need to write anything. Hopefully you have taken a running notes for the same. Now coming to the third point, that is the risk to the banking sector. Risk to banking sector from the rise of e-money. So you know that how bank works. They take the savings of the public and then give the loan. But if the savings of the bank will divert to those private companies, to those private firms, and they issue their e-money, then how bank will issue the loan? Okay, this is the one of the major concern for the banking sector. Now few of the terms discussed over here is, number one is the risk of market contestability. Okay, the contest, you can see if one e-money in the market, say Paytm money, okay, Paytm wallet or Alipay will capture the market, means everyone using that Alipay. Clear? That means what? This means that the central bank money will lose the operations in a country. Getting my point? Suppose Paytm wallet is now effective. That means what? No one will carry rupees. No one will carry rupees or coins in their pocket. Everyone is doing transaction with the help of this Paytm wallet. That means what? This means that they are creating the monopoly in the market. Though it requires huge amount of capital, but once they get the access to the customer, once they get the access to the vendors, then it is very difficult for a new competitor to enter into, and the real money which is issued by the central bank, that will lose its strength in the economy. Clear? Also there are some of the countries which is having weak institutions, weak policies, very high inflation. So there also what will happen, the merchant will start creating their own e-money in terms of dollars, pounds, okay, euros, and that e-money will start operating in that country, because everyone keeps on dealing with that. So this also create a risk for the money which is issued by the central bank. Clear? Also that blockchain technology will also come into play. Clear? Because they need to ensure that they will protect the money laundering and terrorism financing. That is one of the major concerns for the developed countries nowadays. Clear? Now let us move ahead with the point number 4, which is the scenario for banking and e-money sectors. Clear? So here we are going to understand some of the scenarios. Now the first scenario is the coexist scenario. So you can see that there are banks who have their b money, also we have e-money. Clear? So if users will go to these private institutions, then there are some of the services which bank may not be able to offer to the clients because of this development of the e-money. Or features like overdraft facilities, debit card, credit card, okay, apart from that FD, short term bank deposit. So bank will lose of lots of their revenue because of those events. Clear? So because they both coexist at a moment, the bank, they are going to lose lots of chunk of money because of the development of e-money more and more in the market. So from the customers, bank are getting the low cost money, okay, and then bank put that money for say 15 to 18% interest, and over here taking the money at say maximum 5%, so they are earning that 10% additional. Clear? So they will lose that. Apart from that, they will lose lots of valuable data which they are getting from the customers transaction. So loss of data. Apart from that, there will be no client and bank relationship, so the loss of personal relationship as well. Clear? And if the bank will not get the money from the customers, they have to move to the wholesale banking firms. Clear? And from there they need to borrow the money, and if from there they will borrow the money, it is going to be costly, say 7 to 8%. So the bank will lose 2-3% from their profitability. Now the next scenario is the complementarity, where the customers are now connected with the banks. So this private institution need to snatch this customer from the bank to their own platform. Clear? So they are giving the chance to the small salaried person, small businessmen, that they can gain the credit with them, they can build saving with them, okay, they can make transaction without any cost, they can get financial and accounting advices. So apart from keeping their money, they are giving some other services which this small business houses or the poorer households cannot avail from the bank directly. So this is the reason there are many people who are coming to these e-money. Apart from that, they are giving lots of offers, lots of cashback and discounts on the purchase using their e-money wallets. Clear? So this creates a lots of what we say that people are moving towards them because of this discounts, offers and coupons. Now the last problem is the takeover scenario, where if the bank will not get the money, they will not be able to give loans, and if they will not be able to give loans, then how the money will flow into the economy? Okay, because bank play a major role when it comes to the flow of the money, when it comes to the growth and the development of the economy, because they are giving the loan for say 30 years, okay, to a corporate house. This e-money financial institution cannot give 30 years loan because they deal more in the short term assets, but bank, they borrow at a short term and they invest the money at the long term. So this create a disrupt in the economy for the shorter period of time, so that needs to be taken care of. So the last point is the action to mitigate the e-money risk. Write down. See, customers are moving for the e-money. Clear? So now the regulator, now the government come into the picture and to take necessary action to step to ensure that they can mitigate, okay, mitigate risk which are related to e-money. Clear? They need to come up with the plans, policy, procedure, framework, laws, rules, regulations. Thereafter, disclosures, okay, submitting of the annual, quarterly, monthly report to the central government, or you can say central bank. Okay, everything must be there, license must be required. Clear? So let us discuss those points, and then our topic is over. So one thing, the central bank can come up with these e-money private institution, that if suppose this wallet of e-money Paytm wallet, if they take the deposits from the customer of say 1000 crores, so some part of it must be reserved with the Reserve Bank of India. Clear? Say 20% of it, that is 200 rupees, 200 crore must be reserved with the Reserve Bank of India. So this will give a security that yes, some part of money is our secure. Now just like the B money, the money of the bank, backed by the government, backed by the central government, this e money must also be backed by the central government. This will provide stability and it will mitigate the risk like liquidity risk, market risk, as well as default risk. Clear? So that must be taken care of. Apart from that, there must be the discouragement of the monopolies, okay, by ensuring that different competitors will enter into the market and they will compete, so that there will be healthy competition between the organization and the benefits to the customer on the side by side. Clear? Now apart from that, there are top and large international players can come into a small economy and they can give the huge discount to capture the market, and then they can become the monopoly. So in that scenario, the Reserve Bank of India or the central bank of the respective countries, they must give the preference to the domestic e-money provider. Clear? Thereafter, that monetary policy will include that e-money as well. Currently the monetary policy is only incorporating the bank money, but they should consider the e-money and they should pass on rules and regulations for the e-money, as well as they should issue the required license for the e-money provider so that it can be controlled. Okay, they must be accountable and responsible to report to some authorities so that they will not cheat the customers. Okay, so I think that much is more than enough for this particular topic. Apart from that, you can read through the text given and solve the questions required, and make sure that you will take down the notes from this particular lectures. Things will become easy for you quick. Okay, you don't need to spend huge time on this particular current issues affairs. Okay, make sure that they are quick so that these 8 to 10 chapters, okay, that will not become a burden for you, rather than a smooth and a fast track where you can scale. Okay, and the 5 to 6 questions or maximum 7 to 8 questions which are coming from these topics, this can be a game changer for you, because these are totally easy. Tick them correct, take the benefit of it. Clear? Now the central bank is also coming up with their digital currency, but in the partnership with the private institutions. Okay, that is offered with the name of CB, Central Bank Digital Currency, CBDC. Clear? Okay, so I'm ending this lecture here. Thank you.